Next, we're going to discuss unlocking your dream home and how to choose the best mortgage and home loan options. It is very important to choose the best mortgage and home loan options because this can literally mean paying $35,000 plus more in extra interest payments to the banks if you do not gain the best loan option available to you. Saving this money also means the ability to buy several new cars for yourself just based on the monetary amount of that cost and expense. So definitely go, as well as lost opportunities of vacations, like literally 10 plus, that can go toward that extra 35,000 that you're saving. So you'll really want to enjoy improved quality of life and really ensure that you're getting the best loan options when you're purchasing any property at all. It's definitely vital to do a little extra research and hard work to really get the best rate. So here are some priceless tips and tricks and mortgage loan options explained to really enhance your outcomes and help you get the best loan opportunities for yourself. First, we're going to discuss APR for mortgages. APR is the annual percentage rate for the total true cost of a mortgage loan expressed as annual percentage of the loan amount, to include interest, fees, closing costs, points, and mortgage insurance premiums, as well as other charges. APR gives borrowers a way to compare different loan options based on the cost of borrowing. Adjustable rate mortgages are another option, and they are also considered a balloon mortgage. They typically start lower than a fixed rate mortgage, but this increases or decreases over the life of the loan. It is very difficult to predict the future payment or maintain payments for them because they change over time. The other option you have is a 15-year fixed rate mortgage. A 15-year fixed rate mortgage has a fixed interest rate and a repayment term of 15 years. Your monthly mortgage payment will remain the same for the life of the loan. A 15-year fixed rate mortgage typically has a lower interest rate than a 30-year fixed rate mortgage, but the monthly payment is more because the loan is repaid over a shorter time frame. Kind of sounds simple, right? Well, a 30-year fixed rate mortgage is also fixed, and the interest rate and repayment term will last you for 30 years. Monthly payment will be the same for the life of the loan, and they typically have a higher interest rate than a 15-year fixed rate mortgage, but the monthly payment is usually lower because the loan is repaid over a longer time frame. When you're comparing mortgage options, you'll definitely want to consider both interest rate and the APR. The APR takes into account all the costs associated with the loan, including interest, fees, and other charges over time. I definitely recommend always going with a fixed rate mortgage, not ARM, because you will be provided the least quantity of fees and interest in the future because interest often rises with time. Inflation does exist, and the banks will always win and gain their interest and fees over time. Try to lock in a fixed, best possible rate as possible. Most people should allow themselves the lowest monthly payment that protects you in times of hardship or recession. If you go with the 30-year fixed rate mortgage with the lowest possible payment amount, you're actually providing yourself a better ratio income to expense that will really protect you in recessions. And that also does not mean that you cannot repay the loan early or make extra payments along the way. You can always pay off your home faster than the 30 years, regardless of taking on a 30-year mortgage. And then on top of that, there are also tricks to paying off your mortgage sooner versus later. I do have a fun little secrets to doing that, and I should probably create a video on that at some point, but be sure to comment below if you want me to create a video on repaying your mortgage as soon as possible and expediting that process, because there are secrets and tricks that you can implement to pay off your home sooner with less cost to yourself. I can definitely create a video on that, just let me know if you're interested. There are also tricks to overcoming compound interest versus the interest accrued by credit cards. So I always like to say that even if you hate 30-year loans, you should probably get one anyway, because you can literally get a 30-year mortgage and then make large bulk payments against the principal balance. For instance, by implementing zero transfer credit cards with a 0% interest and fee for balance transfers. And then by utilizing this balance transfer card, you're actually expediting your payoff of this mortgage while also reducing your expenses of interest paid to the bank. Overall, it's a huge win. The trick to paying off your mortgage most effectively is based on the difference between credit card interest versus compound interest of a mortgage. Mathematically, it is best to make a $1,000 bulk payment instead of making $100 extra payments to your mortgage. It may be the same $1,000, but if you're making the bulk payment of $1,000, it's way more effective than making 10 payments of $100 against your mortgage. So to reduce interest paid to the bank and pay off your mortgage most effectively and quickly, you will definitely want to make larger payments versus the smaller ones done multiple times. By paying in a large bulk amount, you are also reducing interest paid to the bank, because once you make that bulk payment, that calculation of interest is based on that moment in time moving forward. And so instead of that calculation being slightly adjusted, it is actually extensively adjusted based on that large bulk payment. So it's always better to pay large amounts against your mortgage versus multiple payments of smaller amounts. If you're a little confused about this concept, you could always check out the Carl's Mortgage Calculator app and play around with the numbers in the app and see all of this firsthand for yourself. So compound interest is definitely calculated in a different way versus your credit card interest. Compounded interest is calculated daily, and this is how the banks win. So you'll want to make bulk payments, not mini payments that are smaller. And this is because bulk payments will literally impact you from every moment following that payment. Compound interest is calculated on the amount of the loan and any accumulated interest that has been added to the loan over time. If you stop making payments, the interest charged on the mortgage loan would compound and increase over time. By not making a payment to your mortgage, your amount of interest paid would also increase over time. It is important for borrowers to understand compound interest rate versus credit card interest rate because they both are calculated differently, and by understanding it, you can really minimize the amount of interest paid within both situations. And you could also more effectively pay off your mortgages and your credit cards. The longer the loan term and the higher the interest rate, the more interest you will pay over time. If you do not want to pay all of this interest, you can simply make extra payments and pay off the mortgage sooner versus later. And as I noted, make larger payments versus smaller ones. So I really like 30-year mortgages. I prefer them, and I really think that they are the best because they are reducing your risk and really enhancing your credit situation and your overall protecting yourself. Especially in rough times, job loss situations, or recessions. The 30-year mortgage you basically gain the lowest possible payment amount, and then you make bulk payments to pay off the loan within 5 to 7 years, regardless of this 30-year term. Due to your due diligence, you can definitely choose the best mortgage and home loan options, as well as save money in interest over the long term by simply paying off your mortgage early or reducing your overall interest rate as you're getting the loan approval. By simply adjusting your interest rate slightly can literally mean tens of thousands of dollars saved in interest. And by expediting how long it takes for you to pay off your mortgage, you can also save tens and thousands of dollars. So you'll definitely want to be sure to get the best mortgage and shop around, compare loan options, and go to different lenders and see what your options are. You'll want to consider factors such as the loan term, 15 years versus 30, the type of interest rate, fixed versus adjustable, as well as the fees and closing costs associated with each loan option. It is also important to work with a reputable mortgage broker and loan officer that is really informative and helping you through the process and guiding you toward the best loan options available to you. Definitely research and compare different mortgage options because this is vital toward helping you achieve the best financial goals and situations for yourself for the next 30 years. This decision will affect the next 30 years and extensively cost you or benefit you by tens of thousands of dollars. Due to your due diligence and upfront planning, you will definitely get the best deal because you will affect the next 15 to 30 years of your life. And by really enhancing your situation, paying off your loan earlier, getting the best rates, you can really save yourself a lot of money and headache and time and stress. So definitely plan accordingly and do your research and improve and enhance your situation as much as possible. Compare your loan options, apply through multiple banks, and choose the best option and interest rate for you. And then I think it also comes all the way down to not just choosing the best loan option, but ensuring that your purchase price is within your budget and something that you can afford. Because in the end of the day, struggle, hardship, recession is bound to occur when you want it least, and so you'll definitely want to protect yourself in these struggles and harsh times by simply going forth with your purchase, strategically ensuring that the purchase price is within your budget and something you can afford altogether. So if you're looking for more videos about real estate, definitely be sure to subscribe below, and I'll talk to you all soon.